Okay, today being on 31st of December 2025, which is actually the last day of the year 2025, we are going to cover a summary of actually what happened yesterday, being a very important day. That is now 30th of December 2025, which was a very good, which was a very important day since we were expecting for the last FOMC meeting data. So we are going to cover actually what happened, and we are going also to cover for an employment claim job which actually happened today. So if I happen to go to my official, to the Trading Economics official website, remember we can see if you need this kind of data and all this information, you can consider visiting Trading Economics website, which is a very good website. It gives all the data. Now, on my chart, you can see on my screen, you can see we have the United States Federal Fund interest rates. Here is the meeting. Remember, it is usually a long PDF, but Trading Economics makes it so easy for you, and then gives you a very simplified summary. Now, here's the thing. Let's go and read it together. Minutes from the Fed's December meeting noted that most of the FOMC judged that rate cuts are likely to be appropriate next year if inflation eases over time. Therefore, it gives you a very good idea that when it comes to the Fed or the policymakers, they are super dovish for the dollar, but they have already given a condition: if inflation eases over time. So you need to check on the inflation, then you see what you have to keep yourself updated on what the Fed will be looking forward. When it comes to 2026, we're expecting another two cuts, two interest rates cuts. We're expecting another 25 basis points when it coming next Federal Reserve interest rate decision making. So on the dollar, this is now we can see now. I'm anticipating that I'm looking forward to have the dollar maybe pushing to that kind of a push to the upside, get into that supply zone, then keep pushing to the downside. So that is the outlook. But that, let's see if you right now you can see the dollar index is actually within this kind of a range here. Let's cover actually what happened today. If you go to my forex, that is now the forexfactory.com. Today being on Wednesday, that 31st of December, when you have to check, you have to understand when it comes to forex, this is the analogy. Forex market prices are driven by two things. The first one is the long term, whereby is the heartbeat of the forex market, which is the interest rates. But we have short term or the pullbacks price movement, which is actually driven by the liquidity. Now, we can see today at the same time we had the USD dollar data, that is now unemployment claim, which came out as 199k, which is below expectation of 219k. That is 219k, which is also below 215k as the previous data, which was quite very simple. You could see now on the chart, if you happen to go to another very interesting website called financialjuice.com, you can see very well. Immediately after the data was came out, that is now US inflation jobless claim, actual came out as the 199k, forecast being at 218k, and previous being at 214k, revised as 215k. You can see now on the US dollar index, the price pumped to the upside. Remember, don't get swayed away. This data may be bullish, but when it comes to Federal Reserve, they are actually dovish for this. Therefore, actually what I'm expecting is very simple. I'm just waiting for that kind of a price movement to the upside, and then projection to the downside as expected. And therefore, you can also see, if you can let's check on gold actually what happened yesterday. From Monday, you can see gold actually dropped very massively to the downside. We have a very good zone here, which was a resistance, now turned into support, and probably we can later see the price pushing to the upside. But remember, this one is not a financial advice. Consider doing your own due diligence, and also you can consider doing a lot of research, and then you can keep on following your trading rules for trading opportunities.